Hello, everyone. I'm Andy Serwer. Welcome to Barrons, and welcome to our guest, Scott Strazik, CEO of GE Vernova. Scott, great to see you. Thanks so much for joining us.
Andy, thanks for having us.
So I want to ask you about your key businesses
Sure.
and what they are and what you're thinking of them right now.
Yeah. Well, I mean, to take a step back, GE Vernova, for context, generates about 25% of the world's electricity every day through our customers with our equipment. In the U.S., that's about 55% of the electricity, and if you exclude China from the global number, it's about a third. So we've got a huge install base across a number of technology sets. That includes gas power, over 7,000 gas power units creating electricity every day. We've got 57,000 wind turbines creating electricity every day. We have 65 gigawatts worth of nuclear power, all experiencing different dynamics, all of which we should talk about. And then beyond the power generation technologies, we have our fastest growing business is our electrification business, which is all things related to the grid. Because the reality is we'll often have debates on which power generation source we should use. Regardless of that, we collectively need to invest substantially into the grid to be able to integrate a lot of these different technologies and a lot of different end uses that are coming. So there's a lot of work to do, but it's work to do that we're ready for this moment.
And Scott, I know you may be getting sick of this question, but I have to ask anyway. Can you tell us a little bit about the pedigree of GE Vernova and how it pertains back to old GE?
I appreciate the question, and I don't get sick of the question ever, because I'll be the first to say I've spent my entire adult life with what started as GE and turned into GE Vernova with a lot of pride. In April of 24, we separated out from GE, 100% separation, so it'll be 2 years in April. But we have the history of what General Electric was. And I think the reason I've spent my adult life here is I've always loved the ambition of the company. I've always loved the people. But also within a big conglomerate, because we historically had a big aerospace business, a big healthcare business, and our energy businesses, that can be complicated. Too many goals could be no goals at all. And what the separation from GE is set up is a purpose-built company that I can look at my customers every day and tell them, as you invest in me, buying my stuff, I'm going to reinvest that in you. You don't have to worry about that money getting reallocated to healthcare or aerospace. I'm going to make an even better company for you. And I think that's working great for our customers and shareholders. I think it's also working great for the two other GE companies that now exist between GE Aerospace and GE Healthcare.
So if you were a GE shareholder in old GE, had 100 shares, just to follow up, what happened? You got 33, basically?
Well, at the time of the separation, it definitely wasn't valuing Vernova at 1/3 of the other two, right? So the market decides ultimately how they valued the three individual companies. But certainly at the time of our separation, the assumed valuation of Vernova relative to the valuation of aerospace, which were the last two transactions that happened, it was more the value of Vernova was 1/5 the value of aerospace.
And that's changed a bit?
Well, there's certainly been a lot of appreciation and value in Vernova in the last 2 years.
We'll get to that. I mean, it's been a remarkable run.
Yeah, no, for sure that has normalized to some extent, but not one-to-one over the last almost 24 months. But I also say every day it's still very early for us. And that's early in the opportunity for us, but one that we need to earn every day with our customers and with our investors.
So this breaking up of GE was ultimately a pretty good thing for shareholders.
This was the right play. There's no question about it. I think there's a lot to be said for focus.
Right. Getting back to your company per se, Scott, what's the global footprint look like, and how does that work, and where are your key markets?
Well, the U.S. is our largest end market today. I mean, there's just a huge demand for electricity today. If you take a step back, we probably haven't seen an analogous period of time like this since 1945. Now, after World War II in the U.S. and in Western Europe, every 10 years we doubled the electric power system in the country. And then from 1975 on, it was reasonably modest growth until 2000, and then no growth for 25 years. And the reason there was no growth is because of globalization. A lot of jobs and manufacturing was moving out of the country. There was a lot of productivity that was being experienced in the economy from software, from the internet. There's also a lot of energy efficiency savings as our refrigerators got more efficient. The reality today is those things that were leading to very flat demand are going in reverse. Globalization all of a sudden is creating, in many cases, a decoupled world. And that decoupled world requires new manufacturing in the US that's driving a lot of demand. Software and the internet that maybe at one point was driving productivity, well, artificial intelligence needs the electrons along with the chips and the data to drive that productivity. So we're really going into what we believe is the early chapters of an investment supercycle in the US for electricity growth. Now, the other kind of general theme I would drive is the world needs more energy everywhere, but it's only getting 20% of its energy from electric power. The other 80% of the world is still getting its energy from liquid molecules, from coal and industrial applications. It's really hard to find someone that believes that isn't going to evolve over time and that the shift isn't going to go more and more towards the electron. So we have growing markets in many dynamics, but the US is definitely our fastest growing market today.
And what about the sources of energy for you? You talked about that a little bit. Let's drill down. And do you have wind? I mean, wind is not President Trump's favorite energy source, it seems.
Yeah, we have 57,000 wind turbines creating electrons today. In the US, about half of the wind electricity that's created every day is with our wind turbines. So these are long cycle businesses. In our case, businesses that we've got to invest in through the cycles. President Trump definitely is tough on wind in a lot of his narrative. But I'll tell you, I've lived through other administrations that haven't been cheerleading all of my technologies. We're investing for the long term. The Biden administration wasn't really cheerleading new gas, but we were investing in our gas power business during the Biden administration. And now our customers and our investors are benefiting from that. We continue to invest in our wind business today because from everything we see between now and 2050, the world needs a lot more wind. And what we really are focused on is positioning our company to serve markets and different administrations with different priorities and not fighting those priorities. But if we continue to create a more competitive product and solution, in the end, both our customers and our investors will win.
What are the latest products that you have that you're most keen on, Scott?
Probably the one that's emerging the fastest is our small modular reactor, and that is moving quickly. So think to yourself, in the size of a European football field.
Is that bigger or smaller than an American
It's
football
about
field?
the same. It's rounding. I'm
trying
just doing it because we're in Europe, you know.
Football field.
Fair enough.
Either hemisphere.
Football field.
Any hemisphere.
Exactly.
Any football field. Anywhere. Okay, go.
Exactly. We can build a small modular reactor that creates 300 megawatts.
This is a nuclear reactor.
Nuclear reactor. The nuclear combustion happens underground. And all the electrical equipment is in a turbine building on the ground. That 300 megawatts, to just make that real, that'll power every day about 300,000 homes. That's 300,000 homes in the US. Frankly, in Europe, it's even more. That's important because we don't talk a lot about power density or how much electricity can you create using the least amount of space, but that's going to become a theme over time. So it's a very attractive product because it's power dense and it's zero carbon. And we're in construction on the first one right now in Ontario, outside of Toronto. In November, we signed an MOU with both the US and Japanese government for up to $100 billion of financing of new small modular reactors, which would be 40 in our case. And we see a lot of interest. A lot of our conversations this week are with countries that are looking at where the US is going and working to draft in that same direction. So we're incredibly excited about where small modular reactors are going.
Do you have good leads in the United States? Are we really going to build a new nuclear power plant in the United States?
We have our first application into the NRC, the Nuclear Regulatory Commission. We would expect to get approval by summertime from them to start construction on the first plant.
Can you tell us where it is?
In Tennessee.
Okay.
Yeah, so this is happening. And I would.
And who are you doing that for?
In that case, it's with Tennessee Valley Authority.
Oh, yeah.
So,
Old school power producer.
Yes. But at the same time, I'm highly confident we'll come out of this year with offtake agreements with at least one hyperscaler and other counterparties. So this is happening. Now, it doesn't happen tomorrow. From when we start construction, and we will be in construction by 27 on the first one, it takes 4 years until the electrons are available. So in the US, we're talking about new nuclear electrons in directionally 2031. And that can feel like a while, but while we're building that, we also have the ability in the US to uprate our existing nuclear. So for context, we see a pathway to about 5 gigawatts, so that would be 5 million homes in the US of incremental power, just uprating existing plants. And that will happen between now and the small modular reactor being commissioned.
Yeah, I mean, it goes by quick. It's like your kids growing up.
Exactly.
Right? So how does the size, when you're talking about this football field, compare to a traditional nuclear reactor site?
Well, it is directionally, probably takes up a landmass about half to a third per megawatt. So, but what's really important with it is traditional nuclear plants were much, much bigger. And they were a gigawatt plus instead of 300 megawatts. And then the challenge with traditional nuclear is every time they were built, they were all a little different. And because they were all a little different, they very rarely were on budget or on schedule. By getting to a smaller size that you can really confidently deliver in a smaller footprint, we have a higher degree of confidence we're going to be able to come down the cost curve because we're going to make the same thing over and over again. And that's part of where, in this regard, the administration has been incredibly supportive of us with this trade deal with Japan because they see that if they enable 40 to get built, they understand we will come down that cost curve. And if we build 40 of these in the next decade, we're gonna like the affordability dynamics. It doesn't mean the first one's cheap because it's not going to be. But what we need to do is continually invest in new businesses and products that we have confidence we can get there over time.
So what is the price tag?
We're working our way through that. The reality with the first one we're building is we're very fortunate because Canada already has a very high zero carbon footprint, Ontario specifically, because they have a lot of nuclear, but they also have a lot of hydro.
Yeah.
And they want to finish their decarbonization journey. So the first one we're building right now is more of a cost plus model. We're building it, we're learning, and the Canadian government is enabling it. The fixed price to start building these, we're figuring out right now.
Is it like 20 billion, 100 billion, 1 billion? Am I closer to 1 billion or 100 billion?
The way I would think about it, a different way to contextualize it
Okay.
is if you think about gas power today, because we have a very big gas power business.
Yeah.
It's directionally for an equivalent amount of electricity. It probably costs twice as much. So there's that premium, but it's a zero carbon
Right.
solution.
Right.
But it is twice as expensive today
Right.
as building a gas plant.
All right, so we're all going to look up and see what a gas plant costs. I'm not gonna, okay, can you tell us what a gas plant costs?
So if we put the
gotta get
numbers, a gigawatt, a
Okay.
gigawatt size plant, people would tell you that costs $2.5 to $3 billion today to build.
Okay.
So think
Alright.
to yourself, an equivalent sized small modular reactor,
Right.
$5 billion. Just
Okay.
double it.
Right, right. And you guys are building the turbines specifically, or the whole thing, or what piece is that?
We do the whole power island.
Uh-huh.
So, everything that is creating the electricity, we do.
The powertrain.
The powertrain.
Right,
Very
right.
good.
And so explain that 40 billion, like who gets that money? Where's that money going? Does that go to you? Or does that go to
Ultimately.
TVA or Ontario or?
Well, I mean, in the case of TVA, they're the customer,
Right.
so they're buying the
They're buying it
build,
from you guys.
and then they're
Financing
adding it
that.
to they'll finance that with debt, but then they'll add that to the rate base and get paid over time through electric bills.
Okay, but the financing from Japan and the United States, where's that
Japan
coming to play?
different. That's a
Okay.
different structure. That's a different deal.
Okay.
That's still being worked out at
Okay.
this point.
All right.
But the concept is one that the Japanese government's really providing the LP money to a large extent in the structure. The reason they're willing to do that in this trade deal is because everyone knows the world needs a lot more electrons and that there's going to be a counterparty on the other side that's going to pay for the electricity. And they'll get paid back over time through the electricity that gets generated through the new nuclear plants that are built.
Right, and what is the power source of all these data centers? You're hearing about the construction of all these data centers and they need all this electricity. Well, is it, I mean, from existing power sources would be, the usual mix, but what's the marginal power coming from?
Yeah, if you think in the US today, just generally, we get about 45% of our power from gas every day. Okay, so the largest single power generation source in our existing grid is gas power. With the new build data centers that are getting built today, it's an even larger proportion gas. And the reason is because the reliability expectations that they have are very, very high. And gas power is the most capable of following the load requirements that data centers have. Gas power plants are a little bit like an aircraft engine, same technology. Think about ramping up when you're on a plane. Most of the work on that engine is when you take off, okay? But that same technology with the gas turbine allows us to follow the load of what a data center wants better than any other technology today. So if the grid in the US is 45% gas, it's a much larger proportion of those that are being dedicated to new data centers that are being built today.
And then the other benefits of gas in the United States, there's a good domestic supply and the pricing's okay and it's, it's not the most green, but it's not the most non-green.
Yeah,
of
for
sources,
sure.
right?
I mean, what we say all the time is we want to apply the right technologies where the most compelling resources exist. In the U.S., because we have such inexpensive gas, it makes an immense amount of sense to utilize that resource economically. If you're having to import that gas from really far away, the liquefied natural gas pricing is a lot higher. Then the competitive positioning of gas relative to other alternatives isn't necessarily as good. But when you have really inexpensive gas, it's very compelling, especially in a world where affordability is a key theme, as it should be.
Right, right. Where's the real innovation? I mean, we talked about the innovation in nuclear power. Is there innovation going on with gas?
Sure. We're spending an immense amount of capital right now on how we decarbonize gas over time. So as an example, we have a direct air capture facility that pulls carbon out of the air every day. And just for context, it's an interesting story. That technology is an offshoot from a program we had with the U.S. Department of Defense, which funded us to build an air-to-water program so that troops in remote parts of the world could create water without having to create a logistical supply chain to get water to them in difficult places. We now use that same technology to pull carbon out of the air, and ultimately our objective is to put that carbon capture technology on the flue of the gas turbine and put the carbon back where it came from, underground.
Right.
So if you think in Louisiana, if you think in Texas, these are places that have very inexpensive gas. They also have a lot of empty cavities where the fuel has been pulled out of them. You pull the gas up, you burn it, you catch it at the end of the flue, and you put it right back where it came from. That's a very compelling solution. Now, it's more compelling in places that have the cavity. It's not as compelling if you need to transport the carbon a really far distance.
Right.
But we're investing a lot of capital into that today.
It used to be, and I think it may still be the case, you tell me if I'm wrong, Scott, you go down to Galveston and Port Charles and all these places and you see the gas flares.
Yeah.
Right? And, I thought, to me it always struck me as, complete northerner here in the United States, the kind of deal, like, why are they wasting all that energy? Apparently it didn't make any sense to get it. But I heard they were going to use that energy to make crypto at one point.
Yes.
And then I guess that they're probably not doing that so much right now. But can you guys use that? I mean, isn't that a waste of energy up there?
That's something that, in my mind, any logical person should stand for as irresponsible. Because that methane that is flaring is one, much more toxic than combusted natural gas, and two, it's just a wasted resource. The good news about that is you've had a lot of organizations that have put satellites up in the air that you can very quickly see where in the world flaring is happening. Miraculously, the amount of flaring is coming down drastically because the transparency that now is being demonstrated is addressing it. But those are examples where when you want to talk about gas power and the carbon intensity of what gets combusted is very little. What we have to stop are things like that flaring.
Right. I want to shift gears a little bit. You talked about working at GE for a long time, but I want to ask you about the before GE years of Scott Strazik. So where did you grow up? Where did you go to school? How did you become so passionate about power? Was this when you were a little kid?
I grew up in upstate New York, and I went to university in upstate New York and hadn't spent
Cornell, right?
Cornell.
I saw that. Okay.
Yeah, I hadn't left the state very much when I graduated from Cornell, but one of the big benefits of the university is through many of my peers, it helps you realize there's a big world out there. And GE at the time was what I would call an amazing laboratory to experiment and learn. And I joined the company out of college because it was a red carpet to both travel and see the world, but also work in a lot of different businesses. I worked in our financial services businesses. I worked in aerospace. Ultimately, I was the CFO of our aerospace business for a number of years until I came to energy in 2013. And I'll tell you, at that time, this was a pretty boring industry, if I'm most honest. Primarily regulated customers with very flat demand, and the places that we were doing complicated transactions were in really hard parts of the world that needed the electricity but had a really hard time paying us. That's changed a lot in the last 13 years, and I think it's that much more clear how important it is for electricity for the world. You see that through conflicts. You can see that through how difficult it has been in Europe post-Ukraine and the impact on communities with electricity. You said that with AI and the role that electrons play in winning the competitive landscape of artificial intelligence. So it's only really appreciated many times when the lights don't turn on for those moments, but I think it's becoming much better illustrated in much more settings how important from a competitive landscape and from just communities to be able to prosper to ultimately have reliable and affordable electricity. And that's something I'm pretty excited about getting up in the morning and working on.
And you could have gone to hotel school instead at Cornell, but you didn't do that.
Cornell has a wonderful hotel school.
Right.
Yes, yeah.
But you didn't do that. I want to just end up and talk a little bit about the stock because you mentioned that you went public, 2 years ago?
Yeah.
And it's just been an incredible ride. You're up 370%, more than 10x the market. Why?
Well, I mean, we've first and foremost have been humbled with the market's reaction to what GE Vernova is. But I think the market sees the growth in the company. They see the growth in our backlog. They see the transparency we're providing them in the change in profitability that we project into the future because it's a much more profitable backlog. And if you really take a step back and say the world is going to need a lot more electricity, they're going to need it at scale. You can debate the drivers, but the direction of travel is quite clear, and that this probably isn't going to be solved by companies that are doing it as a hobby. It's going to be solved by companies that can industrialize at scale. We at least have a shot. It doesn't mean it's a given. Every day we need to earn it. And for us, we have a very unique opportunity because we're having more growth today than we've experienced in decades. And because of that, we're just not taking the orders. We're helping the market understand that we're recreating this business and how we make product. And that is going to drive a much more profitable business over the long term, even though in the short term, we're reinvesting a lot of that capital in the business. So there's enthusiasm for what this company can become. But that has to be earned every day, and we really talk about that. So, with our team, what I talk about very often is, although the stock price has gone up, the honest reality, and I'm being very sincere with this, is the potential of the company has grown faster than the stock. So there's a wider gap on what we can become relative to the financial performance. So we're prideful on where we are, but that doesn't mean we're satisfied. And most importantly, it means we're going to get up every day humble with the objective to meet this moment. And that's what we're trying to do.
Scott Strazik, CEO of GE Vernova, thank you so
Andy,
much for joining us.
Thanks for having me.
Thank you.
Thank you.
This is at Barrons. I'm Andy Serwer. We'll check you next time.